we've moved from a pool of crypto natives to the ocean of institutional adoption that's coming in. I do think Trump will shoehorn it in, but I don't think CNN will ask the question. Okay, well, this last month has been really tough. We're down 8 to 10%. It's not as bad as it seems when you zoom out.
Welcome, everybody, into another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studio in New York City, joined elsewhere in New York City today by Rob Haddock, GP at one of the top crypto VCs, Dragonfly. Rob, thanks so much for coming on, man.
Hey, Zach. Thanks for having me on. This is a great opportunity, so I'd love to chat with you this morning.
Yeah, we got a lot to chat through today as we're looking at the charts right now, as it's been a bit of a rough go. Not exactly the chart that I think a lot of people want to see as the sell-off continues here. Second worst week in the year, actually, for Bitcoin as we're looking at the price action right now. Curious to kind of get your take, Rob, on where we're at throughout today's show as we touch on all the big headlines. Of course, perhaps not surprising to see in CoinShares' recent report that there were a lot of outflows from the Bitcoin ETFs too, probably driving the price action we're seeing. I want to dig into all that, but before we do, need to give a shout out to our sponsor for today's episode. Today's show brought to you by Mezzo, a new home for Bitcoin holders to cultivate Bitcoin and grow wealth together. Use your BTC on Mezzo to unlock real utility and honest yield. And Rob, I'm curious just to kind of get your reaction to what we're seeing right now, because you live by the sword, die by the sword. Outflows, I think, more than $500 million in the last week.
Yeah, so it's obviously been a tough time. A couple of weeks straight of Bitcoin outflows, but my perspective is it's not actually as bad as people want to make it out. So you look at crypto Twitter right now, it feels that people are very bearish. There's a lot of concern around what these near-term flows are going to look like. There's concerns around the Mt. Gox overhang that we just learned about this morning, but has been kind of an ongoing topic for a number of years now. But you have to kind of take it into context of what the backdrop is, right? And if you look at Bitcoin was up basically over 150% last year, still up 50% on the year relative to the Nasdaq and to the S&P. The Nasdaq's up 20% on the year, the S&P is up 15%. And so we've had this market that's actually been extraordinarily bullish, and the Bitcoin has performed extremely well as a risk asset. And so the backdrop of, okay, well, this last month has been really tough. We're down 8 to 10%. It's not as bad as it seems when you zoom out. And I think when you think about the tailwinds of better regulatory clarity, of a presidential candidate who's out there saying he's going to be the crypto president, and just the increased institutionalization of what's happening, there's no doubt in my mind that we're actually really well set up for long-term bullishness in the market.
Yeah, I mean, I think, I think people have a little bit to look forward to in the ETH ETF coming on. It seems like timeline-wise, it'll probably be early July, so just a couple weeks away. It wasn't up only when we had the Bitcoin ETFs either, when they first started trading. So it's not exactly, I think, surprising to see the market maybe come back a little bit. I guess, I know you're not like a technical analyst, nor am I, but I am kind of curious how bad you think things can get when you step back and look at kind of where we're at. You mentioned the Mt. Gox overhang. A lot of people were kind of worried about Germany's dumping, which is kind of like $3 billion, I think, in total they have. The Mt. Gox, distribution, I'm not saying all of it's going to get sold, but that's about $9 billion when you add all those Bitcoin up. So I'm curious, when you kind of put it all together, how much sell pressure could be there in the market right now?
So I want to do two things. One is, if you look at the historical context of what happened, like even in 2021, we had a Bitcoin drawdown in, I think it was around, kind of the summer of 21 of about 40%, and then it ran up again into the fall. So it's not uncommon for really volatile assets to be really volatile, right? And so I wouldn't be as concerned about the fact that we're only down 8 to 10% in the last month after this, really, really long. That said, Mt. Gox, to your point, obviously this has been talked about since 21. People have been trying to figure out when these distributions will happen and when things get sold. To your point, it's about $9 billion or 142,000 or 43,000 Bitcoin that's getting distributed, and some Bitcoin Cash in yen. I think it's only going to be the amount that was agreed upon by the creditors to be the kind of early payouts. So Galaxy estimates that the early payouts are about 75% of the creditors versus 100%. And then those early payout creditors had agreed to get 90% of their claim, not 100%. So if you back into that, it's actually probably maybe something like 6 billion instead of 9 billion, to your point, of which 20% we know is Fortress, who has been buying these things up and is by far the largest creditor, and then other 10% Bitcoinica. I know on the Fortress side, there's actually been a lot of conversation around maybe they're not actually going to sell, but they want to continue to stay long Bitcoin. They've actually been getting a lot more involved because of the Bitcoin ETFs, and so there's a possibility here that sell pressure is actually a lot less than even the $6 billion that I just talked
Yeah.
about. And that's on the backdrop of a market who it came down 3% this morning on top of this news. Then it popped up a little bit, and so listen, I think with the way open interest is, like, there's a possibility of a little bit more of a downward trend here, but I wouldn't expect there to be kind of this like mass sell off that really dumps into the market. But again, I'm not a fundamental analysis, so I'm not financial advice.
Yeah, nor am I. And I feel like, of course, it's always tricky to dig through these things. But nonetheless, like I said, I don't know which camp you're in either when it comes to, I guess, the overall market digesting now that they're going to have two crypto ETFs to trade. And the thing that I'm worried about is just how much, expectations were kind of low for the Bitcoin ETF launch because no one really knew what this was going to look like. Now, when you have an ETH ETF launching in the shadow of Bitcoin ETFs coming at a market point that I think looks like general weakness, you run the risk of potentially the hype being too high this time around for Ethereum ETFs when those start trading as expected, potentially early July. Does that maybe present another risk for a leg lower when you have people maybe over their skis thinking that ETH ETFs could repeat what we saw with Bitcoin ETFs?
Yeah, I think it's clear the market, following the approvals of the 19Bs, the market was up, and I think it was over 20% that day. The discount on ETH, the Grayscale trust fund, that went from about 20% down to 2 to 3%. You've seen open interest kind of come a lot higher in Ethereum following that. So it's clear that the market has sort of front run some of this expected, potential inflows of a Ethereum ETF in a way that was happening during the Bitcoin ETFs, but probably not to the same scale. There was some muted, conversation happening about like, oh, actually, how many people are there who want this product? It's clear now, obviously, with the Bitcoin ETFs being the most successful ETFs ever, that there were a lot of people who want that product, and that this will continue to be true. In fact, actually, there was not just in the U.S. We've seen a lot of these kind of polls, but there was another news story today about how Laser Digital, which is owned by Nomura, polled a bunch of wealth managers and investment managers in Japan, and 54% of Japanese investment managers believe that they're going to get into crypto and Bitcoin over the next 3 years. So what we're seeing is that like there's an obvious demand worldwide for institutional investors to get into products like these. And so, whether or not it looks exactly like Bitcoin, and I expect that maybe it will be, maybe 10% or 20% of, Bitcoin flows, that if you take a long enough time horizon, there is absolutely going to be a steady flow of institutional investment into these assets and into this space.
Yeah, no, I think that that's generally, if you back up, that's the trend that we've seen play out through the year. Obviously, ups and downs, and that's kind of the way that it's gone. I do wonder, though, right? If you're looking at, I guess, ways and places to put your money, it has been interesting to watch VCs put their bets down as well. And I'm curious to get your take on this next topic as we move along in our rundown here and look at Pantera's continued bet on Ton. Mostly just because, Rob, this is an interesting one because we've talked so much about adoption in this cycle and what it means to have something that, I don't know, we have the chart up comparing it to Bitcoin's gain this year, and it's pretty noticeable in terms of how much Ton has outperformed when you do put them on the same chart. I think this year we got Bitcoin up about, 44%, Ton up 211%, and now Pantera supposedly raising funds for a second Ton investment. Is this? I mean, you're a fellow VC. I mean, what do you make of kind of the idea of Pantera doubling down on something that does seem to be so levered to maybe people who don't even realize that it's going to be crypto if everything goes well with Telegram's efforts? I mean, what do you make of the bet, and what does it say about where we're at in this cycle?
So the market is like very clearly hungry for these kind of fundamental stories, right? And when we talk to my RLPs, I'm sure the same thing is true for Pantera and for others. The investors who are investing into these VC funds are saying, what is working? They're asking that question. Where is their product market fit? Not just, are the token prices going up? We see the returns, but is there a fundamental story about why this should be true? And Ton's an easy one to get behind that, right? Because Pavel, the founder of Telegram, he recently said there's 900 million Telegram users worldwide, which, even in the most generous view of how many MAUs there are of in crypto, which if I said every single unique crypto wallet that has been active over the last month is a unique person, that 900 million is still 9 times bigger than all of those wallets. And we obviously know that, these wallets are, many of them are owned by the same people. And so the likelihood is that the actual MAUs in crypto is, no more than, call it, 10 million or even less. And so that being said, when you say, okay, well, maybe there's 900 million new people who have exposure to crypto and the Ton ecosystem, it's obvious that like there's a way that you can spin that into a lot of user adoption in the future that is going to be net new, which is awesome. I think the question that I have, and I'm sure that Pantera is asking, and the people who are potentially investing in this fund that they're raising is asking is, okay, well, all of that's awesome, right? But if I'm an empiricist, if I look at what's happened today on Ton, where are we? And Ton today is, I think, and I wrote down a couple stats here. It's the sixth biggest blockchain by FDV.
Hmm.
And it's the ninth biggest crypto asset by if you include like stable coins as well. But when you look at like the other stats of what's happening from a total value locked perspective, it's the 14th biggest blockchain. From a transactions perspective, it's the 21st. From applications built on top of the Tom blockchain today, it's 58th. From developer commits, it's 60th. So you start to look at all of these different stats and you say, okay, well, I can see the story of why Ton should be able to bring all of these net new users, and I want to buy into that. I believe that. But if that's true, we haven't yet seen that adoption. We haven't yet seen those applications, those builders being there that are going to bring in those users. And so that's the question I think you have to ask right now on a relative value basis.
Yeah, I think it's interesting, and maybe a good segue into our next topic as well. Just because I suppose there's probably two options. Like one, you said, if you got the users and everything, and you can bring them on board, great. Then that'll work out beautifully for Pantera. At the same time, though, I do wonder how much of a moat there is, because at that point, you could almost have any social platform that has a bunch of users say the same thing and say, look, we want to add a blockchain piece to this as well. And we've talked so much about dilution in the space beyond Bitcoin and Ethereum. Seems to be, maybe we're starting to reach the point of, okay, can we really have all of these chains have all this adoption at the same time? As you noted, not exactly a lot of native crypto users. And one of the other pieces that I think is pretty interesting is we've talked so much about real world assets this year, as we have in prior cycles as well. And the growth there, at least in terms of how quickly it's been possible for some of these existing blockchains to start to convince maybe some of the TradFi giants that blockchain is the way to go to build on their blockchain, has taken a bit longer. And there was this headline, McKinsey's new report that they had previously said by the end of the decade they'd see $10 trillion worth of tokenized real world assets, and now just $2 trillion in their latest estimation of things, which would basically, I think, Texas, we have that chart as well here showing kind of how they break down how you get to 2 trillion. But Rob, that would not be very good to kind of talk about McKinsey saying, look, we're going to get there. There's going to be a lot of money on chain, to now basically more than cut that in what, like a quarter. I would say that means adoption's moving quite slow. What say you, though, to that estimate?
So I don't really understand that perspective, right? So today there's about $10 billion reward assets on chain, if I'm excluding stablecoins, which they are in their report. That means that we have to get 200 times bigger in the next 5 years for on tokenized assets. That's incredible, right? And Wall Street, it moves slowly, and it was always going to move slowly. If you've been in the space for long enough, there's been startups that raised in 2014 and 2015 that were around permission blockchains, and I'm old enough to remember there was I believe a Forbes article where Blythe Masters, who was at JP Morgan at the time and then left for Digital Asset Holdings, he was on the front that said blockchain, not Bitcoin, right? And it was all about how all of this tokenization was going to happen on these blockchains. And so we're 9 years since then, and it has absolutely been slow. But we're now at a time where there's actual like repo market happening on chain. Broadridge is doing 1.5 trillion a month of repo on chain, where HQLA is also doing hundreds of millions of repo on chain. There's been 12 billion of securitizations of HELOCs done by Figure on public permissionless chain, right? So like we're seeing this adoption. While it has gone slowly, that's what you would have expected if you actually weren't necessarily in Silicon Valley, but spent time in these big, slow-moving public banks, right? Who have a lot of stakeholders, and they take a lot of time to figure out, how we want to move forward and what we want to invest in. And there's regulatory, lack of clarity, right? And so they have to navigate all of this. So 200x growth over the next couple of years sounds great to me. For the next 5 years. That said, the other thing here is, it's worth noting, they excluded tokenized cash, they excluded stablecoins. Tokenized cash and stablecoins are very clearly the biggest product market fit and probably in all of crypto today. There's 160 billion of stablecoins outstanding. My expectation is that by 2030, the amount of stablecoins outstanding will be something like, call it a few $1 trillion at a minimum by themselves. And we're seeing this with, the massive growth that's happening in corporate B2B payments, PayPal bringing PYUSD on chain, wanting to put it in the back end of Zoom and Venmo and others. And we're starting to see a lot of conversation happening at the corporates and at the companies that serve them around how do we use those stable coins as backend infrastructure to have a global permissionless payment system. And so my expectation is, quite frankly, that stablecoins themselves are a multi-trillion-dollar asset, and that even if we're only 2 trillion of other types of tokenized assets, that we're far and away on our way to reinventing traditional financial services, which was always the promise. I will say one thing that was also noted in this report is a conversation around money market funds and mutual funds, and there being some product market fit there. And I think one of the things that we have to figure out, and that has been the tough part about this industry today in this vertical, has been, who are we trying to serve? Are we taking assets off chain, bringing them on chain to serve a customer base that is already on chain, or are we trying to take assets that are off chain, put them onto a better transaction ledger, and bring those customers that are off chain on chain because of that? And that's the really tough part. That takes longer. It requires more regulatory clarity, and that's where the real market is, and that's the people that we're trying to serve, and it just takes time. So I'm not worried about it personally.
Yeah, I think technically I need to correct myself because it was BCG that actually had the previous number of 10 trillion. So, a lot of times these consulting firms blend together. In my mind, it happens all the time. But either way, if you got one saying 10 trillion, now 2 trillion, that to me is a wide gap. And as you said, these things do take time. But it is kind of interesting to see JP Morgan continue to experiment with their own blockchain now. Because that was one that, Avalanche had talked so much about them being kind of a partner in earlier test cases along with Apollo. And, Avalanche also seems like one of those chains that their BD team has focused heavily on kind of real world assets and being the adults in the room, working with these TradFi giants. And to your point, it's kind of two things. It's like, do you want to bet on meme coins growing the space? Or do you want to bet on maybe convincing TradFi giants and all these other issuers to put things on a blockchain? Does that kind of worry you, though, that you got maybe some companies like JP Morgan just saying, look, we'll do it ourselves, and how much of a blow that could be to, as we discussed, all the availability of block space that is now somewhat kind of diluting itself?
Yeah, so it's a good question, and there's obviously a lot of block space today relative to the amount of things that are happening on chain today. If you think about everything that could happen on chain in the future, there's actually not that much block space available, and there's not block space that is scalable and interoperable in a way that would work yet in a kind of global financial system, which is what I believe, and I think everybody believes is, or at least that probably listens to this show believes is likely to exist in the future. Now, with JP Morgan doing, JP Morgan Coin and Onyx, and, there being like Canton and Digital Asset Holdings, which is doing a, kind of a permissioned, but, public chain. It is, I think, a concern for some people around, well, how does this accrue value to the rest of the crypto ecosystem? How do we bring those assets, into what's happening on Ethereum, what's happening on Solana and these other chains? And the question is, it's still unclear how that will happen. But what is happening is that these large scale financial services companies and businesses are picking up their old legacy infrastructure. They're making them tailor made and ready for tokenization. And they're putting them on chains that are going to be, in some way public and potentially interoperable someday with permissionless chains as well, even if they're not permissionless now. So there is this possibility of this essentially being a gateway drug, right, of bringing people onto the broader crypto ecosystem. And while that requires a little bit of squinting and belief, I think it's not that much belief that we have to see what that might look like in 10 years. Now, in this market moves so quickly and everybody's worried about what's going to happen over the next month or 3 months. It's a different story, but that's just not the way these types of companies and these types of businesses work, especially because they are highly regulated. And we have to have a more regulatory clarity. We have to have, this presidential election this year, which might bring some regulatory clarity because there is, a conversation happening around it with both candidates.
Yeah.
And we have to have customers get, more comfortable with all of the tooling that allows them to be, compliant.
Yeah, you mentioned the debate, and that's certainly one of the things we'll be watching this week, as we always like to do in these Monday shows. We like asking you what's top of mind, and we'll get into that as our last topic. But since you mentioned it, the debate is coming up this week, at the end of the week. President Biden, President Trump going at it. Interesting to see, by the way, Cathie Wood coming out and saying that she will vote for Trump because he would do the best job for our economy. That was kind of headline over the weekend. And I know Polymarket is a Dragonfly Portco, so I would be remiss if I didn't check out the odds of what might be brought up during this debate. And if you scroll down on this, Rob, you'll see crypto Bitcoin about a coin flip there, 45% that it will be mentioned. Our friends at Stand With Crypto, the Coinbase advocacy arm, has been pushing for a crypto question. They even introduced a tool for you to kind of remind CNN that there's a bunch of people out there who care about crypto. So we'll see if that gets asked at the debate. But I mean, you got a lot of people saying that if Trump wins, this is going to be a huge move for crypto higher in the back half of the year. I'm kind of curious to get your take as someone who's invested in the space for a long time, who's suffered through that, as I have, not having a lot of regulatory clarity at all in crypto. What you're watching in this debate, what you're watching in kind of the showdown between Trump and Biden.
Yeah, so I'm interested if there's going to be a crypto question. I like
You're taking the no. You're taking the no on that side.
I don't think CNN will ask it. Now, I do believe. Well, here's my expectation. I think that Trump will try to like shoehorn it in somewhere. So if I'm on Polymarket, I'm probably a yes in this case. Don't at me if you lose money on that. But I do think Trump will shoehorn it in. But I don't think CNN will ask the question. And I just think that they're a little bit further behind where the rest of us are in terms of thinking through crypto being a big topic in this election cycle. That said, listen, I think politics more broadly, like obviously, like what are a lot of us looking for? We're looking for just a little bit of sanity and a little bit of I think a modicum of like understanding what the health of these two candidates are and that they're in their respective ages, and just being clear about what they want to do going forward. I think what is good about what has happened, and credit to all of the crypto lobbyists out there and people who have been working on the Trump campaign. His embrace of crypto and of Bitcoin has brought it forefront to now, without it, we probably wouldn't have had, the 19Bs of the ETHs be approved. We probably wouldn't have the ETH ETF happening. And we probably wouldn't have had, SAB 121 going through even though it was vetoed, going through Congress, and we now have kind of further momentum on a stablecoin bill. And so getting Trump to this point has accelerated what's happening in Washington more broadly around crypto. And I expect to see that acceleration continue, regardless of who wins the election in November. Now, what happens depending on who wins after that. I think there's risk on both sides, which is that Trump is an opportunist, and he might forget about us at one point, and also that Biden might decide, okay, well, now this is passed, and now I can go back to being a little bit tougher on the space. And so there's risk. But we're in a better spot now than we were 2 months ago, and I think we're continuing to trend that way.
Yeah, we're going to have SEC Commissioner Hester Peirce on the show in a couple weeks. I think it'll be interesting to have her on around the time. We'll see what happens with the ETH ETF listings and when they become trading, or when they begin trading, rather. But it'll be interesting to, again, pelt her with the question of, do you want to run the SEC if Trump's elected? And she's been kind of tight-lipped, understandably so, about all of that. But Rob, to wrap up here, as we look at maybe what's coming up this week, obviously, I always think I'm in a very interesting spot. I think you probably might feel the same when you both have to look at traditional markets and see what's going to happen this Friday. We're going to have a PCE reading, the Fed's kind of preferred measure of inflation, come out there. And then on the flip side, we're watching meme coins. Jason Derulo, the latest celebrity to enter into the space. I'm not sure which one of those matters more for the crypto market right now. I might say the inflation reading, but it's been wild, man. I'm just looking at the chart here on this one, and I don't know. Look, I'm not going to be the guy who says meme coins aren't good for the space, but you just kind of mentioned regulatory clarity. And I wonder how much of these celebrity pump and dumps, if you want to call them that, might potentially weigh on even pro-crypto people saying, look, maybe we do need some regulatory clarity just to shore up some of this. What do you make of maybe things to watch this week? And it doesn't need to be those two.
Listen, I think to your point about the PCE reading, that is definitely the most important thing happening this week. So there's no doubt about that. The crypto continues to trade as a macro risk-on asset. It's we see what happens in and around the volatility and the volumes every time we have one of these inflation readings. Macro is obviously moving in a sort of an interesting direction, which is that the economy looks like it's softening, the labor market is softening. Which has been good for the markets, because now the markets are a little more, bullish on there being a potential rate cut by the Fed, which is what everybody wants to happen here. And there's so that kind of push pull has been positive, I think. And PC, to your point, is the Fed's preferred inflation reader, and so if that comes in hot, we're going to get a sell off on all risk assets, equities, and in crypto and otherwise. If it comes in cool. We're probably going to have the opposite, right? And so that is no doubt the most important thing that's happening. I do think there's an interesting point here to be made about like risk on more broadly, which is that everyone's saying, okay, well, look, there's been this decoupling of like crypto to equity markets because Nasdaq hit an all-time high again 2 weeks ago. Bitcoin's been trading off, but if you actually look at like broadly what's happening in the equity markets, the breadth is really bad, which means that it's almost entirely driven by what's happening across these like AI stories. And all of these and the majority of the rest of the market is actually selling off, hitting new lows, et cetera. And so I think broadly in risk assets, there's basically a story of AI, and AI is doing great, and then everything else not doing that great. And so it's not surprising to me that Bitcoin's lagging in the same way that the rest of the Nasdaq is in this case. And so macro, let's hope for a good reading on Friday.
Yeah, it's been a bit of NVIDIA carrying the market, I think, for the most part, when you really dig into the numbers. And looking at the odds for the July Fed meeting, you're looking at about a 10% chance right now of a cut. We'll see if any of that changes come Friday. Always fun to watch the CME tool. Rob, can't thank you enough for coming on, man. I appreciate it. I don't know if there's any one thing, any one thought you want to leave us with outside of that as we kind of navigate this week and the rest of the year, really. Hopefully we'll have you on before then. But just kind of reminders. I think we touched on it a little bit to open the show, but always helpful, I think, to get your take for people who might be, I don't know, a little bit more nervous here as we reach midpoint in 2024.
You know what I would leave everybody with? Take a zoom out and take a longer term view. And if you do that, what is happening in this space is we're essentially we've moved from a pool of crypto natives to the ocean of institutional adoption that's coming in, and that ocean is going to take over everything. And so, 2 years from now, 3 years from now, 5 years from now, are we going to be higher? Or think there are going to be more users? Is there going to be more adoption? I think, in my mind, that answer is undoubtedly yes. And so, everyone should take a breath and take it from that perspective.
I think it's a good place to leave it on. Rob Haddock, general partner at Dragonfly. Thanks again for coming on, man. Hopefully we can have you back for one of these Monday shows as we recap the top headlines to kick off the week, things to watch for. And again, our thanks to our sponsor, Mezzo, a new home for Bitcoin holders. Check them out. Cultivate Bitcoin and grow well together. You can use your BTC on Mezzo to unlock real utility and honest yield. For Rob, for myself, for everybody here at Coinage, thanks again for tuning in. You can check out all the other stories we've covered and more at coinage.media. Rob, have a great week, man.
Thanks, Zach. Great to be on.
Appreciate it. All right, we'll see everybody soon. Thanks again for tuning in.